What's going on, guys? Bexio back, and today we got a brand new video on Plug Power to kind of look at the week ahead and how really what's happening in Plug isn't Plug's fault right now. So the problem is obviously the overall market. We have the Fed being more hawkish with the interest rates, and the biggest problem of all is the upcoming recession that seems inevitable with the first negative GDP print that we've had for in a while since 2020. And if we have two, so if we have another print next quarter that is negative GDP, that means that we are officially in a recession. So a lot of people looking towards that. Not good. It is all fear in the market. There's really nothing good to look forward to right now. So big tech earnings also missed, which was not good at all. So a lot of problems, lots and lots of problems, but it is not Plug's fault for all these stuff. It's not even companies like Apple and Google, these guys. It's not really their fault for having these numbers either. So probably some short-term pain that could last all year. And then maybe we try and pick it up after this recession that's coming gets resolved. We can look at Plug Power's price chart here, and this tells us the short term, what has already been what has happened, and the problems we had. So I drew this channel here a while ago as an ascending channel. We were making higher lows and then higher highs as well. Now we broke that channel. We broke this low here. We made a lower low, kept dropping, not good at all. Fell out of the red channel here as well. This stuff, what seemed to be a massively strong support here and resistance on top, really hasn't played out that way at all in this recent time, because obviously we kind of hovered around it here. And once we broke it, we just rallied through it and didn't even, get rejected or bounce around. Rallied through it, fell through it, tried to get back up, couldn't, and then just ultimately fell through it on a lot of bad news in the market. So Plug in a tough spot for the charts, but fundamentally, Plug is doing fine. It's even making more partnerships, and that's a couple things we're going to cover here. But things are moving forward for Plug. So it's just like, back in, let's just say, the dot-com bubble and Amazon, where the stock price doesn't always reflect the company if the company is doing good things to move forward, especially if you're in a market like this one where there is a lot to be scared of and fearful of. And that's what everyone's focused on now. But for the short term here, what we'd want to focus on Plug for the chart is obviously 1906 is the lower bound here. We could find our way all the way down to 1906. Ideally, we don't want to go below that, because going below that, there's not much here. So not many, interactions for anything here, down to like $13, which is going to be a lot of pain in the stock price. If we have to go down to $13, that'll be absolutely ridiculous. But for first thing, hope we could go down to 1906. Hopefully, if we do, we bounce off this and try and stay in this range. And 2363 is the top line here that's going to be trying to get above. In this type of market, I don't think we're going to be trying to get above this. I think the goal for this would be to kind of hover in this area, because dropping below this, not going to be very good. But breaking above this also doesn't seem very likely with no positive news coming out. But for fundamentally of Plug, making partnerships and moving forward, they're actually doing a great job here. One of their biggest ones that people are excited about, but can't be excited in the stock price, is right here, that they, Plug Power and Olin joint venture to produce market green hydrogen. So this is a chemical producer in the U.S. See, alternative energy technology company Plug Power and chemical products manufacturer Olin Corp said Thursday that they signed a memorandum of understanding to create a joint venture to produce and market green hydrogen. That's what Plug's all about. They actually have a product that they make that the offset is hydrogen, so they can get a lot of hydrogen from that product. So they can monetize that. It's good for both companies. The two companies said Plug would market the hydrogen and provide logistical support for delivery under the joint venture, while Olin would provide reliable hydrogen production and operational support. And that would be operational in 2023. So the biggest thing when I first read this was the problem could be that Plug's done this in the past where they kind of relied on other people for producing hydrogen, and it really didn't work out for them. It was super bad. It's what caused them to really have to stumble along for many years before finally getting out of this and finally just kind of doing it themselves, becoming an all-in-one stop. But it's not that at all, because they're not going to be producing hydrogen. It's one of the products they make is the offset. After they make it, the product produces hydrogen that they don't use because they're not a hydrogen company, so they just get rid of it. But now, partnering with Plug, they'll be able to use it, and they'll be able to produce hydrogen, produce green hydrogen, and then market that and sell it. So it's good for both companies. Olin gets to produce hydrogen they weren't using before and monetize it to Plug, and Plug gets to get produce hydrogen at a pretty expected rate. It's not going to fluctuate that much, and be able to sell that as well. So both companies win. So it's not really kind of a place where they need them to produce it. It's just kind of, they already do, so might as well take advantage. And another big headline here, I mean, it just says keep on buying Plug stock. It says analysts following recent partnerships. So they had two partnerships. One was this Olin deal, and another one was a Hungarian oil and gas giant, MOL. So right here, it says when the company announced it's teaming up with Hungarian oil and gas giant MOL Group to build one of Europe's largest capacity green hydrogen production facilities at MOL's Danube refinery in, I'm not even going to try and say that, but Hungary. So it's going to be one of the biggest hydrogen producing plants in Europe. So this just goes back to Plug building out their infrastructure. We know 2024 is a target date to be profitable. That's what investors we should be looking forward to, and making sure that they get on that track and they are profitable by 2024. But in these deals, they're building out the infrastructure. They have 3 or 4 plants in the US. They've got plants in Europe. Now they're building with an oil and gas giant in Hungary. There's a lot going on for Plug, and a lot of good things happening for the company. And just says, just one day later came Plug's second announcement. So this is what we already saw, but them signing a memorandum of understanding, basically with Olin Corporation on the second joint venture to produce market green hydrogen. We already went over that, but this is the part where that I was talking about, that they're not dependent on them making hydrogen. It's just kind of a thing that they already make and don't use. So a quote from an analyst right here saying, looks like the beginning of a beautiful friendship. So love to see that. And then he explains, Olin already produces hydrogen as a byproduct of its chlor-alkali production business, teaming up with Plug to capture and market this hydrogen. Therefore, it will allow Olin to recognize the full potential of its untapped hydrogen supply. That's the massive thing. Big news there. They already do it. They already produce it. It's already a byproduct that they make and don't use. Now they'll be able to use it. They get to make money on it. Plug gets to have it and make money on it. Both companies win. It's just a good partnership. So a lot of good things coming out of Plugs, and the stock price can't reflect it because of how devastating the market is, and how much that there's just so much red, recession fears, inflation fears, interest rate fears, and then the Fed on top of that probably won't come here to save the day this time. And a massive thing for Plug that I've been saying for a while, but is still such an important thing for times like this, where there's so much uncertainty, there's so much fear, interest rates going up, money's getting harder to get. When we look at Plug Power, their financials here, we can see that unrestricted cash and cash equivalents, they have $1.3 billion of cash on hand. So they can finance themselves for when they have losing quarters. I mean, this one was a bad losing quarter. They lost $500 million, almost $469 million. All of these are in millions. So when it says 1,000, it's actually a million. So just so we know that, but they had the cash on hand to cover the loss, cover the partnerships, and they did acquisitions. So this number was around $3 billion, like a quarter or two ago. Now it's at $1.3 billion. They used it to acquire companies and then do these partnerships, help a bit, and then finance themselves as well because they're losing money. So I think that they will probably slow down on acquisitions, continue with partnerships, and then use this money to finance when they have losses. You can see like past quarters, 26 million, 43 million. Those types of losses, they could easily finance for a long, long time. 500 million, obviously they've only got a couple of quarters in there of losing that before they're out of money, but I don't think it'll have to come to that. But it's a good thing for Plug to have the cash on hand, 1.3 billion, to finance themselves and get through all of this stuff with insane interest rates or interest rates going up, money not being cheap to get. They already have the money. They don't have to worry about it. This pain in the market and pain and everything will only last so long, especially recession fears will only last so long before ultimately it doesn't matter and we get through the recession. If a recession happens, we get through it. I think recessions on average last like 6 to 18 months. So get past that and then we'll be in a much better spot, and Plug has the money to finance themselves. So all of that pretty important for Plug to be able to finance themselves, not have to worry. They're making partnerships. They're doing everything right. Everything looks really good for them. Fundamentally, looks great. On the stock chart, doesn't look great, but ultimately it's not really their fault. As with the rest of the market, it's just a really fearful time, and a time where investors, nobody thinks the Fed is coming to save the day because they have to fight inflation. They can't really do that. Maybe at some point they'll be forced to come and save the day and lower interest rates to zero and print a bunch of money. But until then, I mean, there's probably going to be a lot of short-term pain, especially with a recession looking like it's coming up. That's going to do it for this video, guys. As always, I'm going to smash the like button and subscribe. We're on the road to 1,000 subscribers, and I'll see you guys in my next video.